All right, we're going to go ahead and get started. Again, welcome to the first quarter IFTA webinar for TruckLogics. Today, we are going to discuss IFTA. What is it? Who's required to file it? We've got an extensive section in how it's calculated, just so that you know how the tax due or credit is calculated. So we'll go through that. And then we'll also show you, again, how TruckLogics can help you prepare your IFTA report on a quarterly basis. So I am Amber, and I've been working in the trucking industry for almost 9 years. And I started, jumped right in with both feet, getting trucking companies started at the state level, and then with the FMCSA and IFTA, IRP, state registrations, all of that good stuff. And then along with me, I have Christy.
Hi, everyone.
My good friend from TruckLogics. And so we are your host today. So let's jump right in. Again, we're going to discuss what is IFTA, who is required to file, how is IFTA calculated, and then again, how TruckLogics is prepared to help you with your IFTA. And then we'll have a brief question and answer time to discuss anything related to this webinar. If you do have questions about TruckLogics or support related questions, I would encourage you to email support@trucklogics.com as well. So let's define IFTA. It is the International Fuel Tax Agreement. It is a tax collection agreement by the 48 continuous states and then also the 10 Canadian provinces. And what this did was it simplified or streamlined the fuel tax process, meaning that when you go into business and you have a vehicle that's over 26,000 pounds and you're going to be crossing state lines, you are going to get one IFTA license in your base jurisdiction or the state that you live in. And then you'll be required to pay a quarterly return, a quarterly tax to that base jurisdiction, to your home state. And then that home state will divvy out the tax due to the other states that you ran in for that quarter. So who is required to file? So a qualified motor vehicle is a motor vehicle that is used, designed, or maintained for the transportation of people or property. If the vehicle has a gross vehicle weight of 26,000 pounds or more, or if the vehicle has 3 or more axles, regardless of the weight. So if you have a vehicle that's at least 26,000 pounds with 3 or more axles crossing state lines, you are required to have an IFTA license in your base state, and therefore you're required to submit quarterly returns. The IFTA license is renewed annually. Most of these are renewed in December of each year. And the way that the IFTA jurisdictions enforce quarterly returns is when you go to renew your IFTA license at the end of the year, if you have an outstanding return, they're not going to renew your IFTA license until that return is filed. So you want to make sure that you're filing on time to avoid penalties and interest, and also so that you can renew your IFTA license for the next tax year. So we're going to go into how IFTA is calculated, and you're going to kind of have to just go with me on a journey here, because there's a lot of different things that go into calculating IFTA. The first is the taxable miles. So this is the total miles driven in each state for the period of time. So first quarter, second quarter, so on. The next is the tax paid gallons. How many gallons did you purchase in each of those states? Your MPGs, and then the state rates. And so these are the things that come together to create either your tax due or the credit that you're going to receive based on the miles you drove and the total gallons you purchased. And on a very simple scale, that's what IFTA is. It's your total miles driven, the gallons of fuel purchased equals, do you owe at the end of the quarter, or are you going to get a credit back at the end of the quarter? But for the purpose of this webinar, I wanted to take a deeper dive into it to just show you how IFTA is calculated on each quarter. So let's talk about the taxable miles. All miles are taxable under IFTA guidelines. So that includes work miles, personal miles, toll miles, deadhead and bobtail miles, and then miles that are reported for other state filings. So this could be the KYU, Oregon, New Mexico. You're still going to include those miles in your IFTA, as well as reporting those to the other states as well. Off-road miles. Now, some states offer exemptions for off-road miles, and you would need to do a little bit of research for that. In my experience, the work that it takes to calculate those off-road miles is not going to make a difference big enough for the work that's involved in doing that. But again, you can do some of that research on your own. So basically, all miles are taxable. The only non-IFTA miles are non-participating states, which again is DC and Oregon for right now. So, so all miles are taxable. We get that question a lot. Well, you know, what about this? What about, all miles are taxable. So when you are entering your mileage for each quarter, you should be entering all mileage for the totals. So now that we have that straight, let's talk about the miles per gallon, or your MPGs, and how that is calculated. So the miles per gallon is important because this determines how many taxable gallons are required to be purchased in each state. So again, based on your total miles that you ran in each state, your MPGs is going to say, okay, well, you ran 10,000 miles in Texas, you were supposed to purchase 2,000 gallons of fuel, and your MPGs is what calculates that. So your total miles plus your total gallons of fuel purchased. So that is going to equal your MPG. So now that you know what an MPG is and how it factors into the calculations, let's talk about the taxable gallons. How is the taxable gallons figured? So the taxable miles traveled in each state divided by your MPGs is going to be your taxable gallons. And at the end of all of this, I'm going to give like a real life example so that we can go through the math and you can see in real life what this looks like. But your total taxable miles traveled per state divided by your MPGs is your taxable gallons for that state. Taxable gallons is not the same as tax paid gallons or net taxable gallons. Taxable gallons, net taxable gallons. So they rarely match. If these two match on your return, most likely the information you're given is not correct, because the net taxable gallons is what should have been purchased based on your mileage and your MPG. The taxable gallons is what you purchased. It's what you actually purchased in fuel. So with this, if more gallons of fuel is purchased than the taxable gallons, than what you should have purchased, then you'll have a credit at the end of the quarter. If less gallons of fuel is purchased, then you will owe tax at the end of the quarter. And at the end, I'll talk about some tips about, you know, fueling and how to kind of make it even out so that you're not owing a ton at the end of the quarter, or at least how to prepare for that if that's the way that you want to do that. The final piece of the puzzle is state tax rates. Now, again, TruckLogics does all of these calculations for you. So you don't actually have to worry about the calculation part of it or the state rates. We update that on a quarterly basis, so you don't even have to worry about that with TruckLogics. The state rates can vary from quarter to quarter, so they can change, and sometimes in the middle of the quarter, they will have a split rate change. And so why that's important to you is that if, let's say, Florida had a split rate in first quarter, you want to make sure that you're entering your miles on the right side of that split rate. So let's say that you drove in Florida on January 2nd through the 4th. You want to make sure that you're entering it up there January 2nd through the 4th, not down lower where the tax rate is different. So, so that's when it's important to make sure, pay attention to where you're entering your information. If there's a rate change during the quarter, it's important that the miles are reported in the correct month so that the tax rate can be applied in TruckLogics, okay? So bringing it all together. So this is just going to kind of take you quickly through. Taxable miles divided by your tax paid gallons equals your MPG. Your taxable miles divided by the MPG is the taxable gallons. Taxable gallons minus the tax paid gallons equal the net taxable gallons. If this is positive, you're going to owe. If it's negative, you're going to have a credit due. And then your net tax gallons times the state rate is the final tax or the credit due. So that's kind of the very short breakdown of how the calculations work. So again, all the calculations are automatically calculated through TruckLogics. So everyone can take a deep breath of relief. And again, your tax is paid to your base state, and then that state will allocate the taxes to each of the other individual states that you traveled in for the quarter that you are filing for. So really quick, real life application. Let's say that you traveled 10,000 miles and you purchased 15 gallons of fuel in the first quarter. You traveled 8,000 miles and 1,000 gallons of fuel in Texas, and 2,000 miles and 500 gallons of fuel in New Mexico. So this is how we're going to find out our MPG. You're going to do 10,000 miles traveled, your total miles traveled, divided by the total gallons of fuel purchased. You're going to round to the second place. So your MPG is 6.67. So that's the first part that we need to figure out. Now, let's figure out the taxable gallons due to each state. So you had 8,000 miles in Texas and 2,000 miles in New Mexico. So what are the taxable gallons for each state? In Texas, you're going to do 8,000 miles traveled divided by your MPG. So the taxable gallons that you should have purchased is 1,199. New Mexico, 2,000 miles traveled divided by your MPG is 300 taxable gallons. It actually comes out to 299.85. You always round in IFTA. So you're going to round up or round down. We're rounding up to 300 here. So taxable gallons in Texas, you had 1,199 taxable gallons. That's what you should have purchased. You purchased 1,000 gallons in Texas. So you have a net of 199. So you will owe tax on 199 gallons of fuel because you under purchased by 199 gallons. In New Mexico, you had 300 taxable gallons, but you purchased 500. So you actually purchased more than you needed to in New Mexico. So you're going to have a credit because you purchased 200 more gallons than what is required to even out that tax. So then at the very end here, we're going to talk about figuring out the tax due or the credit due. So again, you don't have to worry about this because TruckLogics automatically does it for you. But for this example, we'll say that Texas has a state rate, a tax rate of 0.2, and New Mexico has a tax rate of 0.21. So what we're going to do is we're going to multiply the net tax gallons times the tax rate. So for Texas, 199 is what was under times 0.2%. It means that you owe $39.80 tax due to Texas. In New Mexico, you had a overage of 200 gallons times 0.1. So you get a $42 credit because you over purchased in New Mexico based on the mileage that you drove there. So what TruckLogics does is it takes these calculations for each and every state that you drive through, and it calculates it all together to give you one total of either tax due or credit due. So you'll see here that your $39.80 that you owe Texas minus your $42 credit in New Mexico means that you have a $2.20 overall credit on your first quarter IFTA report and return. So all of this is done in TruckLogics for you, but this is how IFTA is calculated on the back end. And this just gives you a good overview of what happens each time that you're entering your information in. So that's a quick overview of the IFTA calculation process. Now we're going to show how you can report your IFTA with TruckLogics.
So this is your dashboard in your TruckLogics IFTA account. You're going to select the IFTA quarter that you're filing for and you click Start Return. You're going to select the trucks that you're going to be filing that quarter for and click Continue. This is one option that you have. It's to import your fuel and miles from your Motive ELD. You'll select the truck and you'll import those so that those miles and gallons can come directly from your IFTA, from your Motive to your IFTA. Or you can enter your data manually with our QE entry. You'll start off by selecting the month of the quarter. You're going to enter your trip date, your state. You have two options. You can either use odometer settings or distance. The choice is yours. The system will calculate the distance based off of the odometers. And then you're going to enter your fuel purchases by the gallons. You're going to do that for each day of each month in the quarter and then continue. We also have an Excel bulk upload template. You will download our template. Please do not change the name of the template or any of the headers. It is imperative to the re-upload of the template. You're going to enter your unit number, the trip date, the state, the trip, whether it was loaded, your odometer begin and end, your fuel purchases, and the fuel unit. And then you'll upload that back into the system. It'll pull the data and enter it on the back side so that it'll calculate your tax due by clicking Continue. Then it's going to give you an overview so that you can review to see where your current tax is due. If you owe tax, it's going to be in the red. If you're a credit, it's going to be in parentheses, and you'll click Next.
And this is where you'll see down here that it automatically calculates credits and penalties. So here again, let's say that you're filing for a previous quarter. Let's say that you missed third quarter last year. And so when you choose third quarter of 2022 and the date is April 2023, your account is automatically going to know that this report is late. And so it's going to automatically calculate that penalty. And so instead of having a $12.80 credit, if the penalty for your state is $50, you'll see here that it'll have another line with the penalty, and then you'll actually owe, $12.80 plus whatever 50 is. So it'll actually calculate that automatically for you. And this is where you'll see those interest and penalties if you are filing for a previous tax quarter.
Correct. This is your generated IFTA report. It has your IFTA account number, the date that it's due, the period that it was ending, and it gives you the breakdown by state, the total miles that were driven, and the total fuel that was purchased for each state.
And you'll also see here that it gives you the numbers that we just went over. So the total jurisdiction miles, that's the miles that you drove that quarter. The taxable gallons, and again, it says up here divided by MPGs in the section in A. So it's giving you all of these calculations that we just went over and defined across the top here. And then you'll see what your tax due. So this column for Georgia, this person owed $4.37, but for Illinois, they have a credit of $3.79. And then, one of the other things to point out here is that you download this report, it's going to give you your totals, and then most states will have an IFTA account. So you'll log into your IFTA account, and these are the totals. So you're going to take these totals right here, 32 and your tax paid gallons. You're going to take these, and those are the totals that you're going to enter for each of those states. Sometimes we hear, well, why would I use this if I just have to go there and enter it? You can't go there and enter odometers. It has to be a total number of miles for your entire fleet. So if you have 10, 15, 20 trucks, it has to be one number for all of those trucks that you're entering in on those state sites. So this is the report that you'll take it to your online portal, enter in the totals, and that's where you'll actually file the report, and then either be you'll pay the tax there, or it'll tell you what the credit due from them is on that site as well. So other IFTA info and tips. Again, any penalties or interest are additional. The program TruckLogics will automatically calculate the interest for you and penalties. Some states have surcharges. So I've listed some of those here. The surcharge is in addition to regular state tax. So for example, if you travel through Kentucky and your vehicle is over 60,000 pounds, you're paying the state tax at the pump. You're also paying a surcharge on top of IFTA, and you're paying the KYU. So it's 4 times there. Sales tax is not the same as fuel tax. And so we get that question a lot. Well, I paid the tax at the pump. Like, why do I have to pay IFTA now? It's not the same. It's at the state level. We have no control over that. We can tell you that, yes, you're paying the tax at the pump, but there's also IFTA tax. And then some states have a surcharge. Again, TruckLogics is automatically going to calculate those surcharge states for you. So you will see, like, for example, you'll see Indiana listed twice on your report, and one of them should say surcharge, and it'll calculate that surcharge for you. And then our best tip is to purchase fuel where you travel. Most of the time, if you're purchasing fuel where you're traveling, unless you run your business differently, we are not tax advisors, we're not business advisors, but in our experience, we see that where drivers are purchasing where they're driving, it pretty much equals out on their IFTA reports. They're not owing hundreds of dollars at the end of every quarter. And some states like Pennsylvania, those states up there, they have a really high tax rate. So if you're driving through Pennsylvania, yet you're not purchasing any fuel in Pennsylvania all quarter, at the end of the quarter, your Pennsylvania tax is going to be crazy. So obviously how you run your business is how you run your business. But what we can recommend, or our best tip, and the successful drivers that we've seen, are the drivers who are purchasing the fuel where they are driving at the time that they're driving, and then at the end of the quarter, their IFTA report, pretty much, if it doesn't have a credit, it equals itself out. So so do with that what you want. But we're going to have a quick question and answer time. Again, these are questions about the what is IFTA, who's required to file, all of that good stuff. There is a question box on your screen, so you can type your question in that box, and then we will be happy to answer questions here for a couple of minutes. So we'll give just a few minutes for any questions that you might have about IFTA, who's required, what is it, how do you file it, and then if you do, again, have questions, if you've already created a TruckLogics account, congratulations. We have a full support team here in Rock Hill, Monday through Friday, 8:30 to 5:30. If you have specific questions about your account or something like that, we have a ton of resources. If you go to TruckLogics.com, there is a support section, there's a blog section, and we do what we call How-To Tuesdays. And those blogs are so amazing because it literally walks you through how to do fill in the blank. And there's like 15 pages of those. So we have a wonderful support section. We have videos. And then if you do have specific questions and you can't find the answer, send an email to support@trucklogics.com. And then again, we're here Monday through Friday, 8:30 to 5:30 Eastern. And you can always give us a call as well. So I am just waiting to see if there are any specific questions. If there are not questions, again, we will send out this webinar. So later on this evening, you'll get a copy of this webinar, and then we will be happy to answer any further questions there as well. Okay, so we have a question. If you're not using TruckLogics, would this be something that a regular trucking CPA should know? Yes, I would make sure that I don't know who you're using. I don't know what CPA that you are using. But if they offer IFTA filing, we have a lot of service providers who use TruckLogics because they are filing IFTA for lots of different clients. But yes, I would ask your CPA if they know about IFTA and if it's something that they offer. There are CPAs, service providers who specifically work with IFTA. And so I would do your research and find one who is good at filing IFTA to make sure that you have somebody that you can trust with that. And then if you want to file IFTA on your own, again, you can use TruckLogics to manage your business, and IFTA is included with that. And then we also have an IFTA only option where you can just do IFTA. And so that's an option as well. All right. I'm new to filing IFTA. I do have a TruckLogics account. I'll be doing my first entry soon. Is there a grace period there's not a grace period. The IFTA is due May 1st. So you have about a week. And you can contact your base jurisdiction to find out for certain. Again, I'm not 100% sure. I know that back when I was filing IFTA, there's a grace period when renewing your IFTA license. So, let's say it's due on December 31st. Some states will give a grace period. If you get pulled over and you don't have those new stickers on January 1st, they might give a little bit of a grace period. As far as IFTA reports, though, the quarterly reports, as far as I know, there's not a grace period. But again, I would encourage you to call your base jurisdiction IFTA department and find out. And I did see somebody say how much is IFTA or how much is the program. If you go to TruckLogics.com, there is a pricing page there. We have several account types. And it's based on the number of trucks. So this is Connie. If you are a leased operator, it's different than if you're an owner operator with 1 to 2 trucks. We have fleet options, and that goes anywhere from 3 trucks up. And then again, we have service provider accounts, and there's lots of different types of accounts with TruckLogics, and it's based on the number of trucks, which is unique to TruckLogics. And the features are also unique to TruckLogics as well. So again, based on the account type and the number of trucks, there's lots of different features for the leased operators that will just be important to them. And then if you have a fleet of trucks, you have a lot more options and a lot more features because you're managing a fleet of trucks. So if you go to TruckLogics.com, go to the pricing page at the top, and then our pricing is right there. We're very upfront about our pricing. We don't have hidden pricing or anything like that. Just look at the number of trucks that you're looking for, and our pricing is right there. If you do have more information, though, we're happy to contact you about what option would be best for you. As I said, there are 2 options. I really love the full TMS option for our clients. That's where you can manage your entire business. Doesn't matter if you're a lease driver, an owner operator, if you have a fleet of trucks, TruckLogics is for you. We have brokers, we have we have it all. Okay, so it doesn't matter what size business you have. TruckLogics can be beneficial to you and your business. And so go to TruckLogics now and sign up for a free 15-day trial. This is a 15-day trial period where you can enter in as much information as you want, play with the account, do all of the things. We have a sales team that they're happy to do demos. You say, hey, I'm really looking to simplify my invoicing. They can show you a quick demo on the invoicing features. They can show you dispatching. There's so many options here for you. So go to TruckLogics.com, use the 15-day free trial to really enter your information in it's really unlike any other TMS out there, and we're excited for things to come to TruckLogics. So go to TruckLogics if you haven't already started your trial. Go now and sign up for your free trial so that you can get started today. And then, as I said, here is our phone number, our email, our address. You know, maybe you're driving by. Let us know. We're here. But seriously though, send us an email, give us a call if you ever do have questions. We're happy to help. We've got lots of resources, as I mentioned, and we will be sending out a copy of this webinar to everybody who registered. And so you'll get a copy of that. And then if you have any further questions, please reach out. We're here to help Monday through Friday, 8:30 to 5:30 Eastern. So thank you so much. I hope that this was helpful to you, and we will look forward to talking with you soon.